Startup Secrets, where ideas take off.
How do you lose $3.2 billion and come out with nothing in the end? Keep watching as we discuss why too much funding can in fact kill your business. We will tell you how one company went from $3.2 billion to zero. There are three main reasons how overfunding can kill your startup. 1. The imbalance between revenue and expenses. The first red flag is when a business's expenses are higher than its income or total income and it has a net operating loss or NOL. During the early stages of development, costs are not as high, so a portion of the total income can be used to cover costs. In this case, the startup can keep going, even though the founders don't make a lot of money. When the business gets money, it can speed up development and grow twice as fast. This is great, but it will mean more costs, like hiring more people and spending more money on advertising. The first alarm goes off when financial statements don't show a good balance between expenses and income. The business has an operating cash flow deficit or OCF. The money went to the company, development went through the roof, and costs went up, but the money coming couldn't keep up with the fees. Investors don't like to see a negative operating cash flow, which can mean you're in a death trap. 2. Too many investors are risky. When your idea is innovative enough to persuade investors, you will almost certainly be working with a large number of these professionals. Many of them are willing to lend you money to help your business succeed. This is a universal investment principle. However, it can be a red flag if the founders accept too many investors in the business. When a company has a huge number of investors, it becomes difficult to manage them. Sometimes a CEO must spend all of his time pleasing investors rather than focusing on the company's growth and plans. Some investors anticipate that the CEO will be available at all hours of the day. 3. A decrease in creative potential and willingness to take risks. When large sums of money are poured into the business, the founders will be more willing to expand their market and further develop. However, having an endless supply of cash may stifle creativity. Another disadvantage of having unlimited resources is that it does not put management skills to the test. The ability to move forward with a set budget is a critical management skill that few individuals possess. When resources are scarce, managers must exercise greater caution in their judgments and spend every penny for a precise purpose. How Jawbone lost $3.2 billion. Jawbone's worth reached a height of $3.2 billion. The manufacturer of fitness trackers and other electronic devices began quietly liquidating and was being sued by vendors who allege they were owed money. It is the second greatest venture-backed company failure in terms of money raised, behind the bankruptcy of solar panel manufacturer Solyndra in 2011. Jawbone was backed by leading venture capital firms, including Sequoia, Andreessen Horowitz, Khosla Ventures, and Kleiner Perkins. So why did Jawbone die? Why didn't a corporation with significant funds simply acquire it, as has occurred countless times in the past decade? Firstly, the company's investment in the UP3 turned out to be a bad bet. Different versions of the product had different problems, and users often had trouble with the device's limitations and high price. Secondly, the business failed due to fierce competition from Fitbit, which offered similar products at a lower price, and Apple, which offered some of the same tracking features in the Apple Watch. Thirdly, Jawbone severed ties with its outside customer service firm because they were unable to pay for their services, failing to replace it with any form of customer support and infuriating its remaining consumers. So remember, too much funding is not necessarily a good thing. Be sure that there exists a balance between revenue and expenses. Don't take on more investors than you can manage. And finally, excessive cash can stifle creativity and innovation. Thank you so much for watching our video. Click the like button now to support our channel and click subscribe if you want to get notified each time we post a new video.